Yo, what's up, guys? It's Trader X again out in Soweto. So welcome back. So today I'm answering the second most popular question that you guys actually asked me, and that is, what if price breaks the previous day's high and the previous day's low? How do you deal with that? All right, so let's not waste any time and let's get straight into it, right? Okay, so let me just go into my blackboard for those who just don't understand what we're talking about here, right? And if you don't understand, I advise you to go back to my previous videos and you'll be able to understand what it is that we're talking about right now, right? So suppose, or rather, for those who just don't know what we're talking about, this is what we're talking about. You get a candle that breaks the previous day's high, previous day's low, and it also tests the previous day's high, right? Now, if you recall quite clearly, this is what we need to see in order for us to be able to identify our bias for the following day, right? In the perfect world, this would be the case, right? Where price goes after, say, a high, but it never tests the previous day's low, right? It goes after the high, or sometimes in a downtrend, the what we want to see is something that looks kind of this way, right? It could go as high as it wants as long as it doesn't take out the previous day's high, but it takes out the previous day's low, right? It takes out the previous day's low. So ideally, this is the type of candlestick formation that we want to see. I won't say formation because I hate putting um, naming the formations themselves because that's what people hold on to, and they quickly forget the significance of something happening. Instead, that's all they look out for. For instance, an engulfing pattern. You don't know why the engulfing pattern is, but yeah, that's a topic for the next for the next video really. But anyway, in the perfect world, we want to see candles do this, right? You want to see it go after a high and not go after a low, and that will ultimately tell you that the following day you have to be bullish, right? And if it goes for a low and it doesn't go for a high, you already know that the following day you're going to be bearish. And this is what we predominantly want to see. But more often, and they do happen, more often you get something that looks like this, and it causes a whole lot of confusion, guys. Excuse me, guys. I'm using my mouse, so yeah, everything that I draw here is not going to be quite nice. So if you're that type of person, sorry. But anyway, let's get that off. So more often, this is what would happen. This is what you will see, and this will cause confusion, right? Because it goes after the low, or rather the high here, and it goes after the low all in the same day, right? This basically leaves you with a question mark. What's going to happen the following day? How am I going to trade the following day? Now, the key to this, the quickest answer that I can actually give you guys, is to wait for this day, for the next day. So if you get, a candle that does this, don't pay it into mind. That just basically means stay out of the market and wait for the following day to give you the direction, right? Because more often than not, what would happen is you'll get a candle that doesn't go for this candle's low, but it goes after the high. Now, when you get this, this should be your confirmation that the following day you're going to be bullish, right? In some cases, the same thing would be, in some cases, in the case of a downtrend rather, the same thing would happen. Price would go higher, not take out the candle that broke its previous day's high and low all at once, but this candle here would go after the low but not go after the high, therefore alerting you that you need to be bearish the following day. Does that make sense? So that's the easiest way of if you have any confusion and this pops up, right? You just simply know that you have to wait for the following day. Stay out of the market. Stay out of the markets. Wait for the following day to close, and then you can take it from there on. You understand? So don't panic when you see such things, because the questions that I get, a lot of people are just panicking. So don't panic when you see something like this, right? But again, guys, this is only just the tip of an iceberg, right? Only a tip of an iceberg. More often, and I'm going to show you an example that recently happened. It recently happened on Thursday on pound dollar, GBP USD, right? On Thursday, we had a candle that took out the previous day's low and the previous day's high. And I'm going to show you how I dealt with it, right? To just make you understand a little bit more. So this here, right? If you are very, very cautious, You can just wait for the next candle to close, and then you will have your direction either down or up, right? But again, like I said, this is only just the tip of an iceberg. Now remember, guys, this goes back to price structure. I'm going to show you price structure breaks, and the decision that I took on Thursday, when that candle popped up that took out the previous day's high and the previous day's low, all in the same day, right? So now let me explode this. So let me show you what it is that I'm talking about. Let's put this a little bit back. There we go. So what I'm talking about is this candle here. This candle popped up. Like I said, if you're unsure of what's going on here, right, rather just let this go. All right, don't stay out of the market. Wait for this candle here to close. Now you see it closed above or higher. It took out the previous day's high, but it never went for the low. This candle here should be the one with the X, should be the one to let you know that the following day, which is Monday, you have to be bullish, which is this day here. And boy, there was some setups here on this day here, but there was some setups here on this day, so you would have made some cheddar, right? But in any case, this is kind of the cautious way of going into the markets or understanding your bias for that particular day, right? This is the cautious way where you just stay out of the market because you just don't know where price is going to be. You wait for the candle with the X, and then on the candle with the tick, that's when you know where your bias is, right? And which direction you want to be trading in, right? But however, though, guys, what you also want to do, not really, and what you also want to do is you want to understand price structure based on the bigger time frame, based on the daily, right? Based on the daily. So I knew as early as Thursday, once this candle popped up, right? I knew that on Friday I'm going to be bullish. I knew on this day that I'm going to be bullish. And the reason for that is because of price structure that took place on Friday, right? So this is not the precautionary way of doing things, but I urge you to just be safe, right? When you see such a candle that takes out both the high and the low, wait for the next candle to close to give you your direction, and then on the next day, go ahead and trade in that direction that that candle actually suggests. So the candle with the X, you don't trade there. That will be your gray day, as opposed to the one that took out the previous day's high and low. And then on this day here, which is on Monday, you continue being bullish, right? Because Friday would have told you that you're bullish. But like I said, I had already known that I'm going to be bullish on Friday, right? And the reason for that is as follows, guys. So this is in context of what's going on the daily chart, that I had that confidence to be bullish on Friday, right? So again, when I look at my charts, the first thing that I do always is I take a look at my daily chart, and I want to understand where price is at, right? The reason we look at our daily chart is just so that we can understand at what stage of the trend price is at, right? So for instance, this is GBP USD. We can clearly see that we've been in an uptrend for a very long time. So we've been in an uptrend. You can clearly see that. Now, identifying this lets you know that when a pullback happens, it lets you know that when a pullback happens, you can expect that that move is not going to be sustained versus a move that continues the trend, which is going to be sustained way much longer than if it was a pullback, right? Here's an example here real quick. When price fell from this high to this low here, you can clearly see that it was a two candle kind of, not formation, but it was a 2-day downtrend here, right? Versus what happened right after price gave us that swing. We had a 3-day, not even 3-day, but yeah, let's just say we had a 3-day move higher, and it covered more ground than the pullback ever did. So it gives you a whole lot more opportunities. It will carry your trade. It gives you a whole lot more opportunities to jump in, as well as your probabilities are increased because you've identified the trend itself. You know what I mean? And you're trading with the trend itself. So that's one thing that you need to bear in mind. You need to understand where price is at on the daily chart when you jump in, right? So if you're jumping in on a pullback, you need to know that it's not going to be sustained, And if you jump in on a continuation, you can expect that continuation to carry on. It could take days, sometimes days on end, for it to come to an end. Case in point is what happened with this move here. This is, how many days was this? There's the first day, and the last day is right here. This is 14 days worth of an uptrend versus that little pullback that happened here, which is just only 2 days. And you see how much ground this move actually covers? That's what I'm talking about. You need to understand that when you're jumping in, is it a continuation or is it a pullback? And that's the importance of, understanding price structure breaks and looking at your bigger time frame, right? Now, going back to everything here. So like I said, that's what I did. I looked at price action and I noticed that price broke the previous swing to the left right here, right? Not only that, we are in an uptrend. I'm expecting price to at least pull back, and once it pulls back, and then it will continue again, right? So what I did there is, again, this is in context, right? So what I did there was I took up my fib, slept it on the previous swing low as well as the recent swing high that price actually gave us, which is right there. And that made me expect price to have an interaction with this bigger hot zone here before it continues its trend. You know what I mean? So this brings me on nicely to this candle here. So now, as you can see, this candle here breaks the previous day's low and the previous day's high. But for the fact that it had an interaction with this hot zone here, what I saw was I didn't care about the fact that it had taken out the previous day's high and the previous day's low to cause confusion to anyone who is unsuspecting or who's inexperienced in terms of, who just doesn't understand how to identify bias, right? Or you're following this and you're confused. But to me, it didn't matter, because ultimately what dictated the fact that price is going to go higher like it does here is this hot zone, right? So the fact that this candle here took out both the high and the low did not matter, because I was expecting price to have an interaction with this low here, not this low, but would have an interaction with this hot zone. And that's exactly what happened on Thursday. So when I saw this happen, the fact that it broke the previous day's high and low went out the window. I hope you'll understand this, because this is pure price structure, guys. This is the composition of an uptrend: higher highs and higher lows. So from here, it gave me a higher high, and I from that I could expect price to give me a higher low, which does not test or even take out the previous day's low. I mean the previous swing low, right? Based on the daily. So it was reasonable for me to anticipate a move to the high side. So when price had this interaction, it kind of trumped everything. It trumped what I see to the left of this candle here, right? And I knew that I'm going to be bullish on Friday. So this is in context of what's happening in the trend itself. In context of what's happening in the trend itself, based on the bigger time frame. Now there is another candle that I wanted to show you when we talk about context. Here's the candle that I'm talking about here. There's the candle. You see, now the difference between this candle and that other candle is, if you look to the left, that candle is nowhere near a hot zone. Yes, we look to the left, we are in a downtrend, but it's nowhere near a hot zone, right? Now this also happens quite more often than what happened here on Thursday, when it gave me a swing right down here, right at the arrow up. So this one gave me a swing, and not only that, it had an interaction with my hot zone, and it gave me the confidence in knowing that on Friday I'm going to be very bullish, right? Bullish the pound dollar, and I was expecting price to take out the previous swing high, which it did. It did today, and I took profit actually in the early hours of the morning. I'll show you that in a minute, right? But in any case, it's reasonable to expect this, right? That price is going to go after the previous swing. The reason for that is because, again, composition of an uptrend, higher highs and higher lows. So that's it. Anyway, so this candle here is nowhere near a hot zone. And this is what I mean by it may cause confusion when it pops up anywhere else other than it having an interaction with a bigger time frames hot zone, in this case a daily time frames hot zone, right? So in this case, what you would have easily done is, because again, like I said, it makes no contact with any hot zone here, with this bigger hot zone here. It doesn't make any contact with this hot zone here. So what you could have reasonably done, or what you could have done, was once this candle pops up and it causes confusion to you because it takes out the previous day's high and low, and this is the same thing that I would have done. All you had to do was just wait for the following day. And as you can see, the following day does not test the previous day's low, but it goes after the high. Now once you get this, you already understand that you're going to be bullish here. Now remember, all of these candles that I'm showing you, this is a trend at a smaller time frame, be it the 5-minute chart or the 15-minute chart. This is a trend. So from here, you would have been able, provided that price gave you opportunities to jump in, it would have given you an opportunity to jump in on a 4-day uptrend. Does that make sense? Never mind what happened here. Never mind what happened right here. See, FOMO. Do not suffer from FOMO here. And I know a lot of you just don't have the patience to wait for candles to close. Or yeah, you just want to be trading every day. But guys, practice patience. Practice make not being able to see trades, or not trading on a daily basis. Make it a habit, guys. You need to teach yourself not to expect trades on a daily basis, right? But in any case, like I was saying, so in this case, if you were confused, and this is exactly what I would have done, I would have waited for this candle here with the arrow down to confirm or show me really where I need to be, or yeah, which side I have to be, whether I have to be a bear or a bull the following day. So this candle does that. This candle literally just says to me, okay, now we're ready, we've just closed, price has taken out liquidity to the high side. The next day, there's a high chance that the next day we're going to see some more bullish action to the upside. So on this day here, I would have been bullish, and I would take my trades accordingly. You know what I mean? So when you find yourself in this situation and you just don't know where price is going to go after it's taken out the previous day's high and low, like this one does here, rather wait for this candle here and hope that it doesn't do the same thing. Chances are it won't do the same thing. It will either take out the high or the low, right? And again, guys, colors don't matter. It could be a bullish candle followed by a bearish candle. It doesn't really matter what color it is. What matters is price does not go after either one of the high or the low, and it only goes after just one of the highs and the lows, and that gives you a direction. Now let me show you another one. I don't know if I can find another one, but I noticed another one that takes out a high. So here's another one here. So here's another one here to show you that color doesn't really matter. So you see this candle here, it takes out the previous day's high and the previous day's low. You see that? Now remember what I said. If you find yourself confused here, suppose I think there's a fib here. Suppose this fib didn't happen, right? And there wasn't a hot zone here. Again, this is context, right? Suppose that there wasn't any hot zone here, right? And this popped up and you were just confused as to what's going to happen. All you have to do is just wait for this day here. And as you can see, this is a bearish candle, but it still takes out the high and never takes out the low. This should tell you that we are in an uptrend, and the following day you want to be bullish. And look what happens. Had price given you an opportunity to jump in on this candle here, that with the arrow down, you would have taken advantage of, how many days is this? 1, 2, 3, 4, 5, 6, 7, 8, 9. A 10-day uptrend. See that? 10-day uptrend. So when you find yourself confused, guys, when you find yourself confused because a candle popped up that took out both the high and the low, rather wait for the following day's candle. And that candle will literally tell you if price is going to go higher or if it's going to go lower, right? And then trade in accordance, and that's it. Again, guys, though, what I wanted to emphasize here is you want to take a look at your daily chart. You want to analyze your daily chart and see where price is at that particular time. If price is printing higher highs and higher lows like it does here, right? And it gives you, well, like it did for me, and it gave me, this candle here that had an interaction with my hot zone as I was hoping it would, right? then you can go ahead and be bullish the following day or be bearish the following day, because you know what, um, your fib or your strategy actually dictates that you should be. You understand what I'm trying to say? So therefore, it will invalidate what it did to the previous day's high and low. You know what I mean? Because this will be more important than what price did. And again, here, another nice part is it gave us a swing right there. So I had anticipated that actually price was going to go higher. Now let me show you those the trades that I actually took here real quick. So now here's what happened on Thursday, guys. Here's what happened on Thursday. So for the better part of last week, if you follow me on Facebook, you'll know that I had some trades here along this downtrend here, right? And I think I recorded some videos on that as well. But in any case, so here's what happened on Thursday. I had some trades. I believe I had 3 of my trades were filled here, right? And had I been greedy, holding on, hoping for price to come down here, price would have went against me, ultimately taken out my break even, if not taken out all 3 of my stops right here. Now we already know what this means when this happens, right? What we know, what it means when this happens. When this happens, we already know that we need to just stay back and wait for price to dictate to us where it's going to go. The only problem here is not really a problem, but the only thing here is price had gone after the previous day's high and the previous day's low, right? So it would have caused some confusion. Again, because I was expecting price to have an interaction right down here, it wasn't really much of a problem for me. I wasn't confused, you know what I mean? I wasn't confused at none of that, right? But if it were you, what you would have wanted to see here is you would have wanted to see price not go after the day, that violated the high and the low of the previous day, like this day, Thursday. You would have wanted to see price not go after Thursday's low, but go after Thursday's high. And that happened on Friday. So on Friday, you would have been out. Normally your gray day would have been here, but because it took out the high and the low, that invalidates it for being a gray day, right? So therefore you move your gray day to the following day, and once it breaks the high and doesn't go after the low, you already know that on Monday, which is this day, you have to be bullish. You know what I mean? And I was bullish here. The only thing is I also took trades on Friday. See, so you're not wrong in thinking this way, guys. But if you understand price structure and price action, and I suppose you could have taken the same trades that I did on Friday, right? But in any case, so that's what happened. I wasn't expecting price to shoot up like it did here on Thursday. I was actually expecting it to continue on down because, like I said, I'd looked at my daily chart and I noticed a hot zone, and I was expecting price to do something there and move in the opposite direction or continue the trend itself. I wasn't expecting it to shoot up this quick, but it did. I was expecting something to happen right down here, but I didn't expect it to be this quick. Understand what I mean? But when it happened this quick, it validated the fact that it was going to have an interaction with this one, a positive interaction to the high side. So therefore, I didn't care what had happened to Wednesday's high and low being taken all at the same time on Thursday. So I didn't care about that. So that left me an opportunity to jump in on Friday, and 3 of my trades were actually filled here. 3 of my trades were actually filled here for Friday, and I took profit right up here, right just before market close actually. Yeah, I think I cut some more right here just before market close. I forgot. I don't care, frankly, but yeah, I jumped out. I got out of the market very quick. So here I took my profit right up here, right up here, and took some off from the other trades, and then finally I took some off at this level here, and then finally I closed everything. I don't remember, but it was just before market close on Friday because I didn't feel like holding on until Monday, right? Even though I had known that Monday is most likely going to be bullish. Yeah, so I didn't hold on to that. So on Monday again, these are the trades that I actually took. I hope you can see those, right? With the dotted lines. So let me show you. On Monday, I noticed this fib here. What's the highest point again? I think it was this one here. No, it was this one. So I noticed the highest point right there, and my leverage was high here, right? So that's the reason why only two of my trades were actually filled. You can see that with these little arrows right there. So only two of my trades were actually filled. My first take profit was right up here. I took some off again at this trade, or at this candle here. I took some off from the same trade, and then I just let a runner go all the way to this target right there, which is what you actually see right there. So why I'm showing you this is, you wouldn't have been wrong, again guys, like I said, you wouldn't have been wrong in waiting for this day, which was on Friday. You wouldn't have been wrong in waiting for this day to show you the direction, because Thursday, remember, Thursday took out the high and the low of Wednesday, right? And if it had caused any confusion, and this is a safer way of doing things really, what you want to do is you want to wait for Thursday, for Friday, in this case this day with the tick, to show you where it wants to go, where price is going, provided that it doesn't take out both the high and the low again, because that would mean you'd have to wait for the next day. But in this case, what had happened here is it didn't go for the low, but it violated the high, right? Which left you, or which would have given you the idea that on Monday, all you have to do is just wait for a sequence of higher highs and higher lows, jump in, and up she goes. So you're not wrong in thinking this way. So there's two ways. You need to look at the context of, or on which that candle actually pops up, right? So the context again here was, for me, the context here was, I was waiting for price to have an interaction with this low here, and I was hoping for a swing at this hot zone, and it subsequently happened with this particular candle. So again, context, guys, you always want to understand the context in which that candle prints, right? But if you can't be bothered with all of that, that's okay still. That's okay still. What you want to understand is the bias for the following day. So if you didn't bother with this, right, you're not wrong in also doing that. If you didn't bother with, that hot zone here on the bigger time frame, all you had to do was just wait for this candle to close, wait for the next candle, which was on Friday, to take out the previous day's high or the previous day's low, and not go after both of them. Just break only one, and then that would have given you your direction, which is the trade that I took on Monday, which you would have also probably taken the trade on Monday. Guys, get used to not seeing trades on a daily basis, right? So again, guys, the safest way to do it is, once that candle pops up and it takes out both the high and the low, rather wait for the following day to give you your direction. Think of the following day as your gray day. You know what I mean? Because that candle that takes out your high and your low will most likely take out your stops from the previous trend, which it did here on, in my case, because I was bearish here. And then this candle here, like I said, had I been greedy enough hoping for price, to expand all the way down and take my ultimate target, had I been greedy enough and I held on to that particular trade, this candle here that took out both the low and the high would have taken my stops as well, or broken me even. Because remember, when the day started, it went in the direction of the previous trend, and then it shot all the way up to invalidate that trend. Am I making sense? So it would have taken all of my stops along with it as a change direction. Yeah, so the safest way, guys, to do it really is just wait for this day to close, wait for the following day to determine your direction, and use that following day as your gray day, as opposed to using this day, which was supposed to be your gray day, only that it went in both ways. It took out the high and the low, right? So rather wait for the following day to be your gray day, and then the following day go ahead and take your trades. I hope that's simple enough. Anyway, guys, it's been 28 minutes. I hope you'll understand what I'm talking about right here. But again, if you don't, again, questions, send me questions, and I'll try to answer them as best as I possibly can. It's been great, guys. Thanks once again for tuning in, and I hope you learned something again. I hope you learned something. I try to give you a lot of value in these videos, so I hope you did learn something. Yeah, stay safe, guys. Until the next video, I'm out.